Hello, everyone. Welcome to the show. Listen, glad to have you guys here. Now, today is October 28th, 2019, a Monday, and let's take a look at what's going on. I'm going to tell you, things have been progressing in the financial system, like undercurrents, like water running underneath the surface of the water. It's hard to see the direction water is moving under the surface of the water. That's the way with the financial system. It's hard to see what's actually going on beneath the surface. This thing, and I say thing, is actually a meltdown that's already started. They saw it coming ahead of time. They've went out and they've lowered the bank restrictions, the Dodd-Frank Act. Now, this is quite some time ago. They actually started to remove the restrictions under the Dodd-Frank Act, and they've lowered the reserve requirements of the bank. They've went more easy on that, less reserve requirements. This gives the banks an open door to inflate bubbles, but that's not working. That was one of the earlier things that they've done. There's more. There's a lot more that's going on. If we take a look here, we can see this meltdown's already underway. Let's take a look at this article. Let's open up the charts right here, and we'll take a look at this article from Zero Hedge. It says, what it also means is that global banks are involuntarily, they're not doing it because they want to. They're having to. They're having to stock up on risky corporate loans as a result of investors beginning to cut risk in the credit markets. So the first initial early investors are getting out. They see this avalanche coming in a $1.5 to a $3 trillion market, corporate debt market, and they're pulling the plug. And the banks are taking the load. How long has this been going on? Well, anyway, what they're looking for, see, they've been running these markets with something called the greater fool theory for a long time. In other words, it's always going to be a greater fool to buy the stupid product that's not worth anything in the first place, but that doesn't always hold true, and now it's not holding true. And so it says underwriters that could once easily offload this stinking pile of stuff that's got steam coming off of it, risk associated with corporate debt, are finding that coming up with greater fools is becoming increasingly complicated. Oh, is it? As a result, banks like Barclays and Deutsche Bank have been stuck with over $2.5 billion in leveraged loans that they've been unable to sell in recent months. The drying up is just starting. The party's over. The central banks are going to have to support this system at all costs. And this is what we see in the repo market, but it's going to get a lot worse, folks. Because the system is so bloated, so over-leveraged, it's all starting to come down. And in order to support it, they're going to have to, in the end, create inflation. Massive inflation. That's what's coming. So let's get in there and take a look at the prices on the markets today and see what's going on. We're looking at a silver price that's falling like a stone right now. At $17.85, it's down 15 cents on the day. Just can't they get it? These investors out there, they don't seem to really get it. You know what? They're all going to get it at once. And so they're offloading their silver today, buying into things like the market. I'm going to tell you, they're all going to get it at once. And this is going to... gold and silver really haven't caught a bid yet. Really. Considering what's coming, the avalanche that's coming, gold and silver really haven't caught a bid yet. I know there's a lot of people out there who think, we've missed the boat on gold and silver. Oh my gosh, that's just the wrong way of thinking. They got it all wrong. The boat hasn't left the port yet. Nothing's happened yet. This little price move we've seen from like $15 in silver up to $17.85 today, the boat hasn't left the port yet. They think it's already sailed and it's coming back now. They think it's over. Oh, they couldn't be so wrong, so wrong, so wrong. Anyway, see it falling today. You know, a lot of you guys out there, if you hold silver and stuff, you don't like to see this. I don't like to see this, but the investment community, this is like an undercurrent right now. What's happening in the financial system, this meltdown so far, is basically like a secret meltdown. Nobody knows what's going on. You know, it's under the surface so far. But when it starts to manifest itself, that's when the panic begins, you know. But they should be panicking now because it's already on way. It's already going. It's already happening. It's almost like a house, you know, if it's got a fire inside it. Nobody knows that the house is on fire. But you know what's going to happen next in the next few minutes. You know, that's what's happening here. That's the same thing in the financial system. So now let's take a look at cryptocurrencies today and see what they're doing. We're looking at cryptocurrencies had a good 24-hour run, and we're looking at 248 billion. Let me just refresh the page here. 248.9 billion. We're looking at a Bitcoin price of 93.74. And it's holding up there. We're looking at XRP at 29.7 cents, Ethereum at $183, Bitcoin Cash at $268, and Litecoin at $58.40. So all the coins have actually done. They're all actually, you know, cryptocurrency is actually holding up remarkably well in this environment right now. We're living in a very strange environment because the system's starting to undergo a slow meltdown under the surface where nobody can see it. And, of course, you know, they're all going to see it pretty soon. Really. Everybody's going to start to see it pretty soon. They're all hunting for this recession. They're all out there recession hunting. It's like an Easter egg hunt. But what they don't realize is home base has got a problem. Houston, there's a problem. You know? This is what's going on. Take a look here at the stock market. Blissful unawareness so far of what's really going on in the system. 177 points up today. Let me refresh the page. 179 points up. 27,137. You know what? That's the normal pattern, is for the stock market to make new highs before it crashes. You know what I mean? That's normal. That's normal. That's what stock markets do. They always make new highs before they crash. Anyway, let's take a look now at crude oil. It's up 14 cents on the day. $56.80. Just a sec. 56.78. 79. So it's running around $56.79. It's up a little bit on the day. It's up 13 cents for sweet light crude oil. Okay, let's move on to U.S. Treasuries. This is probably the big story of the day, to tell you the truth, right here on the Treasuries. This is the biggest movement I'm seeing. We're seeing quite a substantial move to the upside in yields. That means Treasuries are falling. So we're seeing 5.5 basis points in the 10-year up. And we're seeing 4.8 basis points in the 30-year. That's quite a substantial move for rising yields today. Quite a substantial move. Now let's take a look at the U.S. dollar index and see what it's doing. 97.78. Now, the dollar's kind of going along sideways a little bit now. You know, it was up as high as 99. But, you know, it's basically been going sideways for an awful long time. Let's stretch this chart out and take a look here. Let's go to the last 3 years. 3-year chart. And you know what you see? You see basically really a kind of a sideways movement for almost 3 years. Yeah, it was up a little bit there for a little while back in, let me see what the date was. Back, it looks like in 2018. Back around, it was up to 102.21 back around the 25th, the 12th month of 2018. Anyway, but it's basically been going sideways for a long time now. really been going sideways, starting going for about the last year, Been really going sideways a lot. So we haven't made any real highs and any real lows. Okay, listen, talked enough. Thank you guys for listening to the show. Give me a thumbs up, and we'll catch you guys in the very next episode. Bye-bye.